Hey, good morning. Happy Wednesday. Welcome to Forex.Today. Cover Forex, commodities, crypto, wherever you want in scope. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma, good morning. Welcome to Forex.Today, the YouTube community of, what is it now, 18,000? I think it's 17,970 or something like that. So we're getting pretty close. So thank you for being here. Please ask questions so that I can address your concerns and your needs. That's it. I don't have a pre-designed agenda per se, so I can answer questions that will help you become a better trader. Maybe it's technical analysis, maybe it's fundamental analysis, maybe it's trader psychology, maybe it's just the business of Forex. So ask questions. Keep them, be polite. Treat your other chat and YouTube traders, treat them with respect. Be professional, be polite, that kind of stuff. Take notes is something that I highly recommend. That way you can search, if you take your notes and then you type them into the comment section under the recording, which is available less than 1 minute after I'm done, you can put it in there, but then when you go into your YouTube account, you can search your comments and then you can find very particular video. So if you learned something the other day about portfolio construction, you can type in portfolio construction. You're like, oh yeah, there's that video. Okay, so imagine 5 years from now, you're trying to find that one video where I covered portfolio construction. If you took notes and you documented them in the comments section, you'd be able to find that. Pretty cool hint. I'd like to thank Traders Way for being a part of this community as well. You're going to need a broker one day when you're ready to trade real money. And you're going to need someone that you trust. Traders Way has earned my trust and my respect and my loyalty. So please give them the opportunity to do the same. You just simply visit tradersway.com, open up a demo account. So fast execution speed, small fees and spreads, and big swaps. Okay. Once again, your broker probably doesn't pay you giant swaps like Traders Way does. So if you like income as well as asset appreciation, tradersway.com. Again, you can have an ECN account, fixed spread account, variable spread account. I like the VAR. You might like the ECN. Give it a shot. You know what? I got everything over in the wrong spot. I got to move this over there. Okay, now I can see you. Great. Grand rising to you, Sophie. Grand rising. Theta says, Wayne, I have a question from a friend. Why yours fundamental concept is opposite of fundamental theories? Are you talking about interest rates going up and the dollar getting strong? Because other than that, there's nothing opposite of fundamental theory, but I think you're probably talking about that one thing. And the answer to that is because, those models are not, first of all, economic models are not complete models. You always have to ask what the variables are and what are they fixing and what are they assuming and all that kind of stuff. So the model is assuming the currency isn't a reserve currency, that a currency is just this theoretical currency, this thing around the world. And the logic is, well, if a government's going to pay you a higher interest rate, they will attract money towards that higher interest rate. And in my book, I call it a money magnet. But that's not like, it's not that it's not true. It's It's not the same when it comes to a reserve currency. And you have to think about imports and exports much more important. Okay, in this case, imports. So look at that. It's not that it's opposite. It's that the model that is taught in textbooks and in, let's say, entry level, undergraduate classes, it's just oversimplified. It's not that it's wrong, and I'm definitely not opposite. But you have to understand the difference between the US dollar and the Australian dollar. There's a key difference. Okay, Theta? Cool. All right. So we have a little bit of turn on the US dollar. Big, giant Japanese yen strength. Whoa. Kitty cat coming down. Euro coming down. Aussie coming down. Holy smokes. So maybe we need a reset. Okay. So we're in that time of the month where we're getting ready for next month. We've also hit some targets, and you can see their impact. Okay. Couple of things. I'm pretty sure I got knocked out of break even on my USD CAD short trade from a week ago. So I think I got knocked out at 0 or -3 or 5 or whatever it is. I did take profit on one of my RAND trades. So I took 500 pips and put it in the pocket. So 500 pip profit on USD RAND short, and break even on Kitty Cat. And you can see it's not a bad idea where everything is discombobulated. So we're just, again, getting ready for the next wave, if you will. Euro way down because of dollar coming up. Okay. Yen strong too. So when you look at strong dollar, strong yen, that's important, isn't it? Right. Both of these funding currencies are strong, right? Oh, on pips. What I mean by pips on RAND, because it wasn't 500 pips. If it was pips, it was probably 13,000 pips or 28 million pips. So the way I do it is, right, on a Euro USD, okay, on a mini lot, $1 is equal to 1 pip, right? And you're investing $100 for the mini lot, right? So I invested one mini lot in Euro Rand and made $500. So I made right? So I'm just saying that's 500 pips. I know it's not really pips. In my mind, it's pips. Okay? Oh, thank you, Nalu. Okay. So what I'm really saying is my internal rate of return for that investment was 500%. That's all I really care about, right? Yeah, Kevin, you probably have an ECN account, and the new version has a fix for that. So, gee whiz, I got to get to that. Okay. Does that make sense, Meta? I don't really care about the pips. I'm not trying to make a lot of pips. I'm trying to make money. Yeah, Meta. Yeah. It's just the numbers are so small because the value of the currency is so low. It's like it becomes meaningless. And I really hate this fractional pip stuff. When I first started trading, it wasn't like that. But now, tenths of a penny, hundredths of a penny, thousandths of a penny, it just makes it all convoluted. Okay. Speaking about that, also, I'm in a newbie trade here on the peso. So I took 500, right? I took my 500 pips, quote unquote pips off my RAND trade and I rotated into a peso trade. And you can see what I did is I sold at 20. So you have a break below 20, retracement. Okay, pretty standard price action trade. Just let it fart around. Any questions about this one? There's nothing else going on except price action trade. It's a good short. So let's go back to commodities. Oh, speaking about commodities, do you guys remember on Monday we went through the calendar? Oops, what did I just do? I think I just moved something. Hang on. Control Shift Fire? No, Control Fire. There we go. Fire. There we go. I had to get that right. Oh, now the other thing. What's it doing? It's weird. It's really messed up. What are you doing? Okay, I got to stop touching something. Maybe if I do that and that. All right. Escape. No. Control. All right. Just trying to get through this. Oh, I know. So I'm trying to move my window. There we go. There we go. All right. We talked on Monday about the importance of. Wait, that's not it. That'll work. The importance of today for the kitty cat. So it's here now. I have it on another window. Are you guys got your eyes on this prize? The release of the monetary policy report out of the Banque du Canada. You're on this, right? You guys are on this, right? Is anybody actually going to watch it? Yeah? Pete's got it? Why should you watch it? All right, because it's your job. Because it's your job. All right. So take a look at WTI, my oh my WTI. Okay, we're watching a rotation here. Your customer says, aren't they supposed to announce the end of QE? That's not what I said. It's sort of what I said, but it's not quite as I said. But your job is, do you even know it's important? Right? So if you think it's going to be important, you'd be paying attention, right? That's all. If you're going to specialize in the Canadian dollar, if you're going to specialize in, I don't know, whatever, you'd pay attention. All right, so this is key. Why is this key? And why did we talk about it yesterday? Just remember about yesterday. Huh? Hello? Guess there's a lag today or what? Remember, if you're listening but you don't know, look at this guy. Way too many indicators. There's two moving averages, and I'm measuring a standard deviation. So that's too much? Wow. It's amazing. It's just amazing, huh? Hey, but thank you for showing up and adding that positive contribution. Cool. Well, one of the things we talked about yesterday was the price action showing lots of strength. And then all of a sudden, we get 100% retracement. And I said, that's technically important. And then in here, we're kicking off the 55, which means if you kick off the 55, the chances of like a lower high to double top increases a lot. Okay. So it's definitely a heads up for bulls and bears. And of course, but this has nothing to do with fundamentals. But this does show at least the potential for a change in direction, a change of trend. This blue one is the 55. I deleted the 21. There's no 5, there's no 8, there's no 21. There's just the fair market value and the 55 moving average. Okay. Cool. So that's interesting. We don't know if it's going to be true, but regardless of truth, like, is it going to go down here or is it going to go down here? That's not what this is saying. This is saying is there is a change in market conditions and you may need to adjust your expectations for the market. You see? And that is the truth. Mike, asks, is fair market value of the 200 EMA on the daily only? No, on whatever time frame you're observing. Okay. Remember, you're just changing the time frame. Price and time is the same. So on this time frame, it looks quite bearish. Well, let's put this into perspective. Yesterday, we talked about it becoming bearish. Okay. Lungster says, I'm frustrated, really. Okay, that's normal. It's like the bullish global macro is just not happening despite the bullish sentiment data. Really? If you were entering your trades around April 1st, Lungster, I think you'd probably be pretty happy to where you are now. Guy says, isn't the beginning of May peak oil? Beginning of June, not May. So anyways, the probabilities have changed. So very often I'm not quite fully understood, and I want to make a point here. You understand the rules of, let's say, I don't know, blackjack. Okay? You understand the general rules. And then as you're playing, you should be paying attention to the cards that the other players have, and that, right, and that the dealer is showing. And you can say, oh, my hand was good, but now that I see a king to the right of me, a king to the left of me, and a king by the dealer, the probabilities of me getting a king have dropped exponentially. And now the odds of me having a winning hand have changed, even though I have a pretty good hand. So you can't just say, well, you know, I don't know, let's say I have a pair of tens, whatever, right? So let's go to poker. I have a pair of tens. And you're like, no, it's not bad. It's pretty good. You kind of have to bet. Okay? And then on the flop, there's face cards on the flop. So anybody with a face card in their hand now beats you. So now you're like, well, I got to play the double tens, right? I got pocket tens. This is pretty good. I got to play. So I'll go, right? And then you see the flop and you're like, oh my God, even if, right? So even if you got this pair, anybody else with another pair is going to beat you. And now you're like, well, I don't, check, right? Check. And then someone says, well, I'll bet you $2. You're like, $2? Screw you. I'm out. Fold. Right? So the odds change as the market conditions change. And that's all this is telling you is like, you've been doing quite well for a while. This indicates, and by the way, I don't give two hoots about a 55 EMA. It's just one of the tools. But if I had no moving average, right? And no standard deviation, right? I would still have to say, okay, this retraced 21.4, this retraced 21.4, this retraced 618, this traced 382, this retraced 21.4, this one 618, and this one 100%. This is the information you have to notice. Okay? And this whole region here now sets up a potential change in trend. So, okay, it could do this, but the probabilities have diminished. If all the bulls were that confident, why did they bail on the trade? Okay? So if all the bulls bailed on the trade, then there's some inherent weakness in the market, and that vulnerability could lead to a bear selling, in particular off a shoulder, and drive it back towards fair market value. So you have to say, oh, hold on here, Haas. I was a bull. Maybe you're still a bull, but the market conditions have changed. Maybe you pocket some change. Okay. Cool. Right on. La-di-da-di, we likes to party. Take a look at gold. We've hit our target. What do you want to do with gold now? Oh my God, there's so many lines. There's so many indicators. There's so many. I don't know what to do. I can't process this amount of information. Oh my God. It's too much. What am I going to do, Lucy? Lucy! Let me help. Let me help. Let me clean it up. Oh my God. Oh my God. Our new visitor doesn't like standard deviations. Apparently didn't take a statistics class in college. All right. So, all right. Maybe this will be helpful. Maybe this will be helpful. You have a double bottom, which we predicted in advance. And then the first entry would be here if you're aggressive. The second one is this trade. Okay, the higher high predicts the higher low inside of a sweet spot. The sweet spot's in here. And it worked, sure enough, thus producing a new higher high inside of a take profit zone. Okay? Which is a fancy way of saying if you bought around here at the beginning of the month, the target is here. So here we are near the end of the month, April 21st, and we're in our take profit zone. Do you have to? No, you have to at least acknowledge where we are and then make, right? And then make a decision on what to do. That's all it means. So if we are going to trade this like a standard, boring, any given month, we would expect to see a retracement back into this zone. Now, April and May don't tend to be normal months, but you can do, once again, I don't know the future, so at least you know that you need to be making decisions. Okay? If you don't know you need to be making decisions, then that is what's holding you back. Okay? So the question is, how do you want to play this now? Okay, you can plan on this in the next week or two. That's one way of looking at it. The other thing is, what if this continues its bullish trip and we're closer to here by next week, which is reasonable to consider because we've already had the pullback, right? Like this part here shows that we hit the pivot profit zone and already did the retracement. So it could go higher. And the next target, as you can see, is next week's projected high, okay, which would then lift and elevate this. So maybe 1750 right now is May's M2. But what if this goes up higher to 18? That would elevate the central probably to 1777 and elevate this to 1760 or something like that. Okay. So really what you're asking, and here's what I'm asking you, I suppose, if I'm going to put it in plain English. This retracement may have been the May entry. Okay? But you should have been, if you were aggressive already, because you waited. Because remember, we waited 3 months for this change of trend. Then we got it. So I don't know how important that was to you. But this may be the future entry. Okay? And then, based on that, our target is really closer to 1850, which is another $100. So we went from like 1650 to 1750, and now, right, 1750 to 1850, which would be a May target. And I think by like July 4th, we could be at 2000. It's plausible. Now, how many here remember talking about this way back 3 weeks ago? How many people remember talking about that at least 3 weeks ago, maybe even 6 weeks ago? Oh, sorry, MZ says, why do you give up on the rest of the moving average? No, I didn't give up on the moving averages. I was making a point 2, 3, 4 days ago about changing market conditions. So you have to understand, guys, I don't look at combinations of moving averages to like tell me what to do. I don't say, oh, wow, look, this tells me to be a bull or a bear or get in and get out. Now, you can kind of start like that in the beginning, but eventually you have to be a little bit more of that, more than that, right? What I was saying in that instance is when I see it touch that moving average, it is telling a particular story. I'm not looking at the 5A cross. I'm not looking at the 21. The language I use in a scenario like that is the 21 is dead to me. Okay? So I don't care about the 21. I don't care about the 5.8. I use that for entries. But that wasn't an entry analysis. That's a changing market conditions analysis. And what it's saying is if we double top, we're probably going to devalue the asset down towards its fair market value. Okay. Greg says, I remember a couple of years ago you said it could go down to 800. Did it go down to 800? Nuno's asking about gold being a safe haven asset. Well, we don't need a safe haven asset right now, right? Right? That's not what the world is asking for. Like, hey, I don't want to invest into real estate or the stock market or Bitcoin or Doshi. Like, I don't want to do that. I need to invest into something safe. Well, no, that's not what people are doing. Also, is it an inflation hedge? Well, we don't have any inflation, and we're not expected to have any inflation. So it's not really inflation hedge, but could it just simply be like an asset class priced in dollar? Yeah, and dollar is expected to weaken. Is it risk on? It's probably not a risk on asset either because it doesn't pay any income and all that kind of stuff. It's not really growth anymore because we've replaced that with crypto. So if you're looking for some exciting action, you would probably jump on, Bitcoin or XRP or something like that, right? Okay. So let's go back to what we predicted for Bitcoin. Okay, going back, I guess the beginning of the year. But this next wave here, if you recall, we had this. You guys remember doing this? Like, seriously, months ago? We had it lined up. Here's the 618 at 50. We had to wait, if you remember, weeks for it to make this trade. It hit the 50%, which is, 618, which is 50,000. And our target was 65, which is right here. I even have it double lined. Okay. How many people can verify that as being truth? And that it's not just sort of something I rehashed because it hit 65 and dropped. And now I can say, look how smart I was, versus we just did hardcore analysis and waited weeks, and it came up and not only hit our entry, but hit our exit like with unbelievable veracity. It's crazy though, right? So now the one is, will we reset this? How much of a break do we need? Okay. Crazy though, right? So here's the thing. Over time, I've noticed that there are more and more professional traders in the market, and it behaves better, but you better know how to exit, not just enter. Okay. What's up with the flash crash? Well, I look at it as big players know what they're doing. They know how to trade properly, and they do it. Right? Easy entry. Okay? Easy entry. Is there going to be a new one? I don't know about that yet, honestly, because I'm not treating this as a breakout anymore. Like this isn't a range. Like if it had popped up this way, I would have conviction for it. But because it dropped through initial support and is reset off second support, I can't tell you if it's still bullish. That the analysis is inconclusive. It's like a double shift of supply and demand. It's indeterminate. It's just as bearish as it is bullish. John says, will I continue off the charts with Wayne McDonald again? Yeah, I think so. The weather's beautiful now. The problem right now is there's heavy construction going on in my yard, but I guess on Sunday afternoon that would be fine. But right now, giant swaths of my home are being ripped down, new walls going in. Well, first of all, entire walls coming out, new walls being built. There's heavy construction coming on. And that will probably continue to about July 4th. So I got a lot going on the outside of this house. So can I hang around and do that? But I guess if it's Sunday, yeah, I could probably pull that off. But yeah, maybe. Okay. So anyways, I hope you appreciate that I'm not trying to I'm trying to give you the honest sort of take on where we are now. I find it indeterminate. Okay. Yeah, there is strong demand for Bitcoin. I get that. But, a fool and his money are quickly departed, right? So just because you're at support doesn't necessarily make it a buy. Okay? So you either do the technical analysis or you don't. Okay? So check this out. This price action is crazy bearish. And typically a $15,000 drop would be, important. Okay? So like that's the thing, especially in very aggressive markets like this, maybe hyped markets, people, they move away. I guess I should probably put that back. It was this one. People throw away their analysis so that because they're making money. But those people will also lose money. So if you're going to trade this and use technical analysis at all, if you have a chart and you're trading Bitcoin, then you need to use it right. So you can get lulled by just buying at stupid prices and it keeps going up and making you money, but don't worry about it. If you trade this pathetically, you will also lose money just as much. And so you're like, you just won't do it right. This is a clear sign of a potential change. So you ignore it at your peril and maybe you get saved by the trend. That happens. Doesn't make it good. It makes you lucky. Okay. So, like for example, the next line would be 50. Could Bitcoin drop all the way back to 50? Well, here's the thing, and maybe because I don't have it on my chart, maybe it changes things, and I need to recognize that. This is not the bottom of the move, guys. The bottom of the move is down here. So let's change this up since I don't have a true proper chart here. How would one behave if that was the price action indicated? Okay. I would probably box this off. And let's make it blue just to match this. Okay. I would probably box this off. Yeah, okay. I'll box it off like this. All right, so now we got to play inside those walls. But here's what the walls mean. It means there's a, truly, like it means there's a mean, and this is an outlier. So if you were going to trade it using this kind of methodology, you would pay attention to these prices. Because there's, price support and resistance going on here. Okay, and then this one. So we're really kind of, if you want to look at it this way, do you see how we're right on that price? We are at the mean. The mean right now is equal to our current price. So, based on this type of analysis, statistically speaking, it is not overbought, it is not oversold, you have no alpha. Okay? Do you understand that? Like you have no competitive advantage or edge because it's just as likely to do that. And it's just as likely to do that, but you're not even doing one of those. You're in the middle. So now what could really happen to you is you could do this for a while. Or, but you don't really know. You think you know, but there's no statistical analysis to what you're doing, and that's what charts are, right? So you only have your fundamental belief in Bitcoin, which is fine. Maybe that's your alpha. or maybe you're moving away from fiat currency into cryptocurrency. So you're selling the dollar to buy Bitcoin and you believe everyone else is behind it. Or Elon Musk sends a tweet. Well, I don't like trading assets where Elon Musk sends a tweet and the asset goes up in value. I don't like that. I don't like anything about it. I think it's in fact wrong. So if you're going to use technical analysis, at least do it right and say, I don't have any statistical advantage at this price. Now, if it was overbought as a bear, you could sell it. If it was oversold as a bull, you could buy it. What do you do at the mean? The hell do I know? Nothing. So Elon Musk is market making, and therefore I absolutely hate it. I absolutely, totally hate it. If one dude can make a market, I'm not really interested. Okay? I don't know. I hate everything about it. Absolutely hate everything about it. Now, if George Soros is going to move the market, he puts his money into the market. Elon Musk puts his money in the market, waits, and then sends out a tweet, and all the Elon bitches buy it, and Elon makes money because he's manipulated it. I think it's inappropriate. Okay? Okay? But I'm not Elon's bitch. All right. On to happier notes. I want to look at the ends. Okay? Because they have broken. We briefly looked at them yesterday, and now some of them have broken. So I don't know if this is a new opportunity, but check this out, right? Check this out. Wah, wah, wah. That's not good. And then this is supposed to do something like that. But notice we at least identified support and resistance properly. I do believe, not necessarily on a yen pair, but on a dollar pair particularly, that this will go up by the end of May. And I was pretty clear, starting right around April 1st, let's say from April to June, this will go up. Okay? Well, it's not even May yet. And then I showed people in previous years, it was this time in May before it even took up. Like sometimes it waits to the third week of May before it lifts off. In other years, it's earlier. But this idea that maybe the stock market has to come down, right? Sell in May and go away. Well, I like to buy in May at the dip. Okay? Some people sell in May and go away. Right? I like to let it dip and then therefore buy in May and go away. Right? So it changes slightly every year. And we knew the yens were going to underperform. Now, I hope that is valuable information. To have some sort of knowledge that yen pairs went from performing very well to suddenly underperforming, and you knew it before it happened. And now it's happening, and now you're like, nice. Okay. Wayne, how long do you think dollar, yen, and Swissy week will last? Dollar, yen, and Swissy? yen is not going to be weak. It's going to be neutral and will not weaken until, I won't even think about it till the third week of August. Probably more like the third week of September, in my opinion. Okay. Dollar. So we've rotated out of yen weakness into dollar weakness is the play right now. And then by the time we get to 4th of July, we're going to go into neutrality. Okay. And, you know, shoot at rabbits. Okay. Now, if you get lost, okay, back yourself out, you're probably in the weeds, and like follow sort of this move, maybe like euro yen will be more like this in the coming days. So it could be down for another, let's say 2-3 days. It could be down and then sideways, and then maybe up sideways, and then up sideways, and then up sideways. Maybe. And for euro yen to go up, what will we need? What will we need to see to get euro yen to go up? Please take a guess. And if you don't know, type in a question mark. Samuel says, what's going to happen to the USD yen if the yen also gets weaker? Nothing. And that's why I don't trade it. Not yen weakness per se, because I've already said yen neutral. So I'm neutral as of April 1st. I'm neutral on yen. So JPY, okay? So that's why I prepared you guys for weeks for yen neutrality. Thank you, weak dollar. Samuel nailed it. Euro strength is not the answer. You think it's euro strength, but it's not. It looks like euro strength, but it's not. Okay? So anyways, but it can be. It doesn't have to be is what I'm saying. Now, if euro actually gets strong, then that's going to be really great. That's good news, right? But we don't even know who's going to be leading Germany in September. Okay, Richard says, how? Good question. I love questions like that. Okay, Euro, USD, according to the Bureau of International Settlements, the last time I looked, is approximately 40% of all Forex, of which the US dollar is the only reserve currency, which means everybody on the planet, every central bank, business deals around the world. If Japan buys oil from Singapore, it's priced in US dollars. So if USD is the reserve currency, and the Bureau of International Settlements says the euro dollar is 40% of all FX, and almost all of Forex is directly impacted by the reserve currency, and I say USD is going to fall in value because if you think of a basket, because the basket is so heavily loaded in euro, if the dollar falls, the euro will appear to rise. Because euro dollar will rise even if nobody is buying the euro. You have to think of it like an index. The dollar's falling against everything, especially euro, so it will at least look like euro dollar's going up, but no one is actually buying the euro. Now, if people actually buy the euro because it's a good opportunity to invest in Europe, then it'll go up even more. But I'm not even expecting people to say, you know what, I want to invest heavily into France. I'm not smelling that on the wind. But if they did, then it's going to go up even more, but it doesn't have to. Olin says it's changed. It's now 32. All right. Appreciate that. Thank you. Okay, but let's just say 1/3 of Forex is this, and we expect dollar to fall. So is euro going to be able to overpower the US dollar? No, they can't, because they're not a reserve currency. Now, you might say to yourself, Wayne, how come? Why? Like, what's the big deal about the reserve currency? The Fed can print currency. Well, I should back off. Create currency. The Fed doesn't print currency. The Treasury prints currency. All right. So the Fed can create currency, or the government, let's say the Treasury, can borrow money. Let's focus on that. The Treasury can borrow money from investors all around the world. Okay? But the debt is dollars. So what happened to Turkey? Why did Turkey collapse? Why did its currency go to zero? Well, many different problems, but one of the major problems is the Turkish economy doesn't export enough. They're underperforming. They're below potential GDP. They don't export. So when they export, they're importing foreign currency. Well, this is important because Turkey went out to the world and borrowed money in dollars and borrowed money in euro. The problem is they don't have any dollars or euros because they haven't exported anything. So their government has decided to print money or create money. And now they have to take the lira, sell the lira to buy euro and dollar to pay back their loans. But when the government sells, let's say 100 billion euro worth of lira, that's a lot of lira, son. So all of a sudden the value of the lira plummets. And all they're doing is creating some money to pay off their debt, because their debt isn't in lira, it's in euro or dollar, and they don't have any, so that they have to go out and buy it, which then increases the supply of Turkish lira globally, diminishing its purchasing power. Now, here's the vicious cycle here, which means now their lira is worth less than it was before this process, but a month later, they have a new debt payment. So now they got to print even more money, more and more and more lira to buy enough euro and dollar to pay off the bond payments again, which then lowers the value even more and more and more until it gets to zero, because they have to spend their lira, convert it to euro, then give whoever they owe the money to that person, so the value of the euro goes up, but the value of the Turkish lira goes down, and it gets worse and worse and worse and worse and worse and worse. The United States, however, can borrow money, but in dollars. So now if the value of the dollar drops by 50%, there's like massive crisis. The value of the dollar drops by 50%. And let's say they owe Germany money, and they owe Israel money, and they owe China money, and they owe Singapore money. Yeah, well, they pay it back in the dollar. But then Singapore says, hey, look, we lent you $1 billion and you could buy 1 billion cans of Coca-Cola. But now you're paying us back with money, and now we only have 500 million cans of cola worth of purchasing power. And they're like, well, shut up. We borrowed $1 billion. We're paying you back $1 billion. What the hell's the problem? And they're like, whoa. What you don't understand is the money is worth half as much as before. They're like, well, how much do we owe you? Well, you owe us $1 billion. Well, we paid you $1 billion, so quit your crying. What are you bitching about? You gave us $1 billion, we're giving it back. See, isn't that lovely? But they're paying it back So it's like, how about this? Switch it away from currency. The United States, let's say a year ago, borrows a billion cans of Coca-Cola. Okay? And then a year later gives them 500 million cans of Coke back. And they're like, let's just call it even. Well, that's what's actually happening. Right? That's what's actually happening. Because they're like, well, why did you only give us 500 million? Why didn't you give us a billion cans? Well, the value of each can has doubled. So we borrowed $1 billion worth of Coca-Cola, which is 1 billion cans. Now we're paying you back with $1 billion worth of Coca-Cola, but now it's only 500 million. So we're even. And they're like, wait, we kind of look at it like you're 500 million cans of Coke short. They're like, whatever. So you see the advantage of having your own debt in your own currency, right? Your debt in your own currency. So that's why it's really unfair to say, like, going back to the question earlier, I think Theta asked the question, why is the reserve currency different than all other currencies? And you have to ask, right? And this is one example, okay? But why I think if you raise interest rates in the United States so the dollar weakens, you have to ask yourself, well, why is the interest rate going up? And this is something else the model doesn't even consider. This is why you got to be very careful with your economic models. It doesn't say why interest rates went up. Now, if interest rates went up because we're producing more than potential GDP, that means everybody in America is rich, which then means consumption is super high, unsustainably high, which means we're importing a huge sum of products from around the world, which means we're massively exporting the US dollar, and therefore the dollar actually weakens. Now, when things are bad, this is going back to Theta's question, when things are bad in the world and the global economy is about to crash, let's say, a business cycle crash globally because we're so intertwined now. Maybe it's war, maybe it's a terrorist attack, maybe it's an exogenous shock like COVID-19. But if the entire world's economy collapses, things are bad, interest rates fall, in this case, to zero, and the dollar gets unbelievably strong. So Theta, when interest rates collapse in the United States, the dollar goes up in value. And when interest rates go up in the United States, the dollar goes down in value. And that is the opposite of what is taught in school. Now, is my economic philosophy the opposite of reality? No. Mine is based on truth. I know, I've been sitting there for 20 years watching currencies and interest rates. So the model that's taught in the textbook is not accurate for a reserve currency, but what they usually do is they say, well, in a closed economy, and you look at this, and then in a okay? You understand that? So I think if you follow rules 1, 2, and 3, when it comes to investing based on these like interest rate differentials, and particularly against the reserve currency, if you just follow 1, 2, and 3, and I mean exactly the way I explain it, I'll guarantee you'll make $1 million. I don't care if you start with $1,000, $10,000, or $100,000. I'll guarantee you'll end up with at least 1 million. But you have to do it exactly the way I just explained. Okay. So that's that. So let's move on to the next. Oh, this one I actually have set up bearishly. And look at that. That could get interesting, right? Okay. Right? That's kind of interesting, right? Well, let's see what happens here. Eddie, feel free. Okay. So let it play out. And look how beautiful this was on the way up. Here's the expected consolidation, and here is the rotation. Right? No, I know, Eddie, but like you're saying, like, why wouldn't somebody do that? There's like a million reasons why, right? Everybody, if you're talking about an institutional investor, a high net worth individual, they invest for reasons, right? So, for example, why would you have a wealth manager and you paying them 1.5% of your net worth so that they can buy you a bunch of ETFs? Okay. A, you can manage the money yourself, or B, you could just buy the S&P 500 and capture the beta and not worry about getting more than the beta and such, right? No, I know, Eddie, but what I'm just saying is there isn't one investment philosophy or need that fits every customer. Okay. Now, as a Forex trader, very often people will come to you, people with money, and they'll say, Wayne, I'm overexposed to the Great British Pound right now because, I'm buying property in London. Can you help me hedge? I don't want the pound to keep going up or the dollar to keep falling. And I have these expenses that are going to be showing up every quarter. And I can't have the dollar fall 5% and the pound go up by 5%. I'm going to get crushed on this investment. Can you help me? I'm like, yes, I can help you hedge your interest or your currency risk, stuff like that. Like there's there's so many different opportunities. So why wouldn't a rich person buy Bitcoin ETFs? Well, they probably would. They probably do. They probably can. They probably have. Okay. So yeah, you would be an alternative. So as a Forex trader that does maybe some crypto or something like that, you would just have to compete. Right? You just have to compete. That's all. It's just another opportunity for a high net worth individual or small institutional investor. But a lot of investors, like, for example, in the disclosure document, or in their investing mandate, it may say that they cannot invest into crypto because it's considered a high risk alternative investment. Okay. And it's just not in the mandate. Okay. And lastly, most wealthy people and small businesses, small institutions, that kind of stuff that might invest into you, Eddie, they're not interested in making a lot of money. They don't want you to try to make 200-300% trading in Bitcoin. Why? It's not what they're asking you to do. They already make money. They already have money. What they're looking for is consistent returns over long periods of time. So they would look at it and say, well, I don't really need 200%. What I want to make sure is you never drop negative 10%. You're like, well, I can drop 10% in a day. Yeah, well, we're not interested in that. Oh, well, we can make 200%. Well, then drop, right? Drop your leverage on your Bitcoin instead of, a potential 10% drawdown. How about a potential 1% drawdown? And instead of 200% a year, how about a 20% upside? And in a world where the stock market is likely to go up somewhere between 5 and 10%, and you are likely to produce somewhere between 10 and 20, dude, they're quite happy. Okay? But everyone needs to really focus on this. People with money they don't want to be exposed to an investment opportunity that might make 200%. Because reward is a function of risk. They already have money. They don't need your risk. Now, if they wanted to do that, if they wanted to have that kind of exposure, yeah, they'd open an account, pop in, 50 grand into a Bitcoin trade, and that's it, right? Or maybe they'll call you. Eddie, they might call you and they're like, dude, I just need exposure to this Bitcoin thing. It seems really cool. Or my buddy at a cocktail party told me I need to be an XRP. So can you do that for me? And you're like, well, what type of account is this? Is this a retirement account, investment account? What are you looking for income on this? Are you, what kind of returns are you trying to look for? And he might just say, you know what, this is basically, this is risk capital. I want to see if I can turn 50 grand into 5 million. You're like, okay. Right? You're like, okay, I can do that for you. Okay. But that's a lot different from someone that says, I need a Bitcoin ETF. So it starts to get sort of strange. Like, why would you do it that way and all that? So maybe it's a great opportunity and maybe you love it, but I'm just saying many people may not love it the way you do, right? Okay. So, okay. So what I teach when it comes to portfolio management in the portfolio management group is that I should be able to walk into their office and say, hey, Eddie here is a new client and he wants to be exposed to whatever, Bitcoin. Okay. So I could say, Jim, this is Eddie. Eddie, this is Jim. Eddie, Jim is going to be the portfolio manager on our project here. Okay. And so he's going to be buying Bitcoin on your behalf. And we're going to try to load the boat. Okay. Now, Nuno, he's also a Bitcoin trader, but he's going to hedge the downside for us. So when Bitcoin looks vulnerable to having a retracement, and by the way, this could be a dramatic retracement. It could be 1% in a day. It could be 10% in a day. So we really need Nuno to be here ready, willing, and able in times of vulnerability. So in those times, Nuno will be shorting Bitcoin as a way to hedge your exposure to the beta risk. And together, they're not going to collaborate, together but separately. We will be able to capture the upside in Bitcoin like you want, but try to lower the volatility in your overall portfolio. Okay. So maybe maybe this team doesn't get 200% next year, because by the way, Bitcoin, if it goes from 50 to 100, how do you make 200%? Well, now you're adding leverage and leverage and leverage. And so now we got to be careful. Okay. There's way better ways of doing it without the leverage. I would use leverage to hedge, but not to invest. Okay. Like maybe here's a thought process. 90% of it is in a real Bitcoin and 10% is used to hedge to the downside. Okay. You see? So now you're only using 10 to 1 leverage, but you own a Bitcoin and it's going up and up and up, and it goes from 50 to 75 now, hits 75, and all of a sudden Nuno's on it with the leveraged account. You remember it's only 10% of the initial cash, right? Right? But now can drop some money, or maybe let's say it's 50 to 1, okay? And now can start trading to the downside, capturing profit on the downside. That profit is offsetting leverage in the physical Bitcoin, if you want to call it that, the actual Bitcoin. So the wins over here are offsetting the cash losses over there. And then as soon as the market conditions change again, and we're at support and a buying pivot zone, and it's starting to cycle back up, Nuno stops hedging. Okay. Okay. So I call that smart beta. Cool. Coffee, cigar, maybe. Is it only? It's only Wednesday, huh? So we have that Bank of Canada. I want to remind you. Did I post it? I know I showed it to you. 100 minutes from now. What do you think about that? Just looking around. So for about 3, 4, 5 days, I think, my initial USD RAND trade has just been sitting on 700 pips. It goes 650 to 7, 650 to 7. So it'd be interesting if it starts rolling down to the next level. Thank you, 88. Okay. So again, I'm trying to get you guys to really be professional. And so I don't know if you know how FX Bootcamp works, but you go to fxbootcamp.com, you sign up for some training videos, and it's super cheap, a few $100s. And then it says, hey, you want to join my live group? We meet once a week and we plan trades that are 100 to 300 pips each. We call it the swing trading group. It's $99. People are like, oh, yeah, that sounds good. So now in the live group, we do group work and presentations, and we do technicals and fundamentals and psychology and lots of stuff. But imagine doing group work with other foreign exchange traders. It's really cool stuff. It's not just me babbling on. So you do that for a year or 2 or 3 or 5 until you really have become a good trader. And then we have a portfolio management group, and you can try out for it. But remember, there's an exam. You have to actually pass a test. It costs you $200 just to try out. And in that test, you have to open up your MT4 and trade under our rules of engagement, and in 1 month earn at least 10,000 pips. If you can't do that, you're not ready, we're not interested, stay with the swing trading group. Okay? Can you just join the swing trading group? No. Yeah, if you don't know how to trade. See, my swing trading group isn't me teaching you how to trade. It's us as a group making decisions. But if you don't know how to do it, then forget it. Oh, yeah, CEO Black. Yeah, those are nice. Seriously, that's a nice one, Anthony. So, so you have to have the training videos. If you're going through a tough stretch, go back and do the courses again. But what we do is practicing making decisions. Much different than you following rules. Well, if this does this and that does that, then I have to do this other thing. No. We think, we discuss, we debate, we challenge. Yeah, well, irregardless. I mean, dude, what is it? It's less than $400. Take the damn courses, right? I just paid for an MIT course. It's 6 weeks, and I think I paid like $3,000 for it. I mean, dude, it's $400, $350 or something. Dude, just take the course. Right? Like, was it going to hurt you to learn how to, right? But at the very least, Richard, you're going to learn my language and my thought process so that we can have an intelligent conversation down the road, right? That's what it's about. Okay. Right? It's a small pittance. It's a small pittance. Katia? No, Kate says it's 1,000. No, it's not. If you enter the coupon code, it's not. Okay, check this out. It's a test. It's a test. Okay. Okay, you ready? It's $1,618. It is? Well, it's not if you can pass the test. Here's the first test. Oh. No, it's not. It's 382. Yeah, it's a reading test. Okay. Okay. Now, the interesting thing is I'm also doing a macroeconomics course right now. We've done 8 lectures of, an hour to an hour and a half each. And I'm probably 2/3 of the way through. And that's included for free. But it will be charged. There will be a fee this summer. So there's a dry run, and they'll all be removed when it's over. And we'll do it again. Okay. Cool. Okay. Just reading your chats here. I'm getting tired. Crypto's a bullish market. Great. Is it? It's not $1,000. Big discount. Coronavirus. Yeah. Oh, someone's talking about Warren Buffett or something. For real, Wayne, I'm coming. I want to join you guys. Awesome. Cool. And for every one person that says that, half a people, right? For every 10 people that actually say that, maybe 3 actually do it. So I hope you're one of the best, man. Cool. Yes, a lot will go, right? When do you get to plan monthly trades is a question. We meet Thursdays at 2 p.m. And we set up trades 100 to 300, right? And when do we plan monthly trades? Usually this week, like this week, like what is it, tomorrow? So tomorrow we will be planning May. Yeah. Okay. Yeah, if some Sangam says it's probably being pirated on Google. Yeah, if some scumbag wants to steal my crap and someone wants to purposely buy and stolen crap from me, they will not earn my loyalty and respect, and they will not move to the next level. Remember, the next level is for you to become a portfolio manager and have me help you, raise money, or work for my fund or stuff like that. Like, dude, if you want to rip me off and feel good about yourself, then I can't stop you. But if you want to earn my respect, you're going to actually be in my crew. Right? So I suppose that's how I deal with that. Richard's studying hard for the CFA and CMT. Yeah. Yeah, no, I get it, Richard. That's cool. Yeah, CFA is pretty important. Okay. Cool. Anyways, I guess I'm done. Tired. It's one of those days. I know it's only 9:30 in the morning. I'm tired. So anyways, peace on earth. May the pips be with you. May your profits be above average. If you enjoyed today's shoe, please click the like button. And also, please leave a comment on the recording. All you have to do is refresh this page 22 seconds from now, and you'll be able to leave a comment. Peace on earth. May the pips be with you. May our profits be above average. Cheers.